Okay.
Yeah, I hear you.
Yeah, you can hear me, Abby. All right. So let us start. Let us start immediately. Let us start. So now I'll start by sharing my screen. Yes, my screen. So let me open the trading view. That's first. Trading view. Trading view. So let me share the screen. Let me share the screen. So before I start and before I join anything, let me just start first by reading a key choice. Like, let me just read some words to us. Just a few words. A few words. So, can you hear me, right? Let me share the screen.
Yes.
Okay, now. So, let me share the screen. All right. So, can you see the screen?
Yeah, I can see the screen.
Yeah. So, in the last class, what I dropped for you guys, I talked about trend and chart and forex analysis, right? If you could remember, I talked about forex analysis. Forex analysis. So in today's class, we'll be looking at the different aspects. Oh, no. We'll be looking at the different aspects of the forex analysis that was discussed. We'll be looking at the different aspects of the forex analysis that was discussed. So I'm going to start first by saying this. Majorly, we looked at um we looked at forex analysis. We are majorly now we are looking into technical analysis, right? Majorly, we are looking into technical analysis. Majorly, technical analysis. So in technical analysis, we discussed the candlestick anatomy. We discussed trend line. We discussed trend and types of trend. So under trends and type of trend, we discuss what uptrend, downtrend, and what ranging market. Or better still, I said that the type of market trend, I said we have a ranging market or we have what a trending what market. We have a ranging market or we have what a trending market, right? So under a ranging market, or better still, sorry, under a trending market, we have two types of trending markets, right? We have two types of trending markets. We have an uptrending market and we have what? A downtrending market. We have an uptrending market and we have what? A downtrending market. So now, from what you can see on the screen, can you see the screen?
Yes.
Okay, good. You can see the screen. So this is a typical example of a downtrending market. A downtrending what? Market. A downtrending market. That is a market that is moving what? Downwards. Can you see the direction of the arrow? It's moving what? Downwards. Do you get that? Market is moving what? Downwards. The market is moving what? Downwards. Do you get that? The market is moving what? Downwards. That's what you can see there now. The market is moving what? Downwards. So now, let's identify the property of a downtrending market. Let's identify the property of a downtrending market. So in a downtrending market, we listed different properties. Let me mark them out now. So we have a high. Are you with me? We have a high. We have what? We have a low. Are you with me? Then the market went up and created what? A lower high. Are you feeling me? Then it came down, created what? A lower low. You get that? Went up, created what? A lower high. Then came down, created what again? A lower low. Went up again, created what? A lower high. So continuously, the market keeps creating what? Lower low and what? Lower high. That's what we term as what? A downtrending what? Market. It keeps creating what? Lower low and what? Lower high. That's why we term it as what? A downtrending market. For better illustration, let me just try and show you the flow of the market. How the market was moving what? Downwards. Let me show you the flow of the market. How it was moving what? Downwards. How the market was moving what? Downwards. So this was how it started. We started from this point. We came down here. Are you with me? This was our first low. Then we went up, but we didn't go as high as the previous high. So we had what? A lower high at this point. Then we came down again. Are you with me? Now forming what? A lower low. That is, this new low is lower than the what? Previous low. So from this new lower low, we went up again. We didn't go up as high as the previous high. Instead, we formed another what? Lower high. Then from this lower high, we came downwards again. Do you get that? We came downwards again. I can just say we came downwards up to this point. Let's just take up everything. We came downward up to this point, forming what? A new lower what? A new lower low. Then from this point, we went back up, forming what? A new what? Lower high. Because the high is not as high as the previous one, neither is it higher than the what? Previous one. So we formed what? A new what? Lower high. Then coming down again, we formed what? A new lower low. Went up again, formed what? A new lower high. Then came down again, forming what? A new what? Lower low. You get that? You get that?
Yes, sir. Yes.
You get it, right? Okay. Now,
Yeah.
let's take it one after the other now. So let's mark it up one after the other. So the market started from this point. Are you with me? It came down to this point where it found the base. Then it went up, right? On going up, it didn't come up to this point. Instead, it stopped at this point. Do you get that? Then it came down again up to this point. On coming down to this point, it was unable to go higher to this point, but it stopped at a lower high at this point. Do you get that? Then it dropped forward to this point. Are you following? It tried going up
Yes,
again,
I'm following.
unable to go up. It stopped here, then it dropped again. Are you with me? So this is an example of
Yeah.
what? Of a downtrending market. This is an example of a what? Of a downtrending market. Are you with me?
Okay.
Are you
Yes.
with me? An example of what? A
Yes, I'm with you.
downtrending market. Downtrending market. So the market is going what? Downward. You get that? So that's what? A downtrending what? Market. Good. Now, we've seen the behavior of a downtrending market. Are you with me? We've seen the behavior
Yeah,
of
I'm
a
with you.
downtrending market. Good. Now, let's look at an uptrend market. Let's look at an uptrend market. Let me delete some of these stuffs. Let's look at an uptrend market. Let's quickly look at an uptrend market. Let's look at an uptrend market. I don't want to take away everything from the chart, actually. That's why I'm deleting it one after the other. So let me try and see whether I can pick it. Okay, I can pick it actually. Good. So now let's check an uptrending market. Still on this same chart. This Euro USD chart, right? This Euro USD chart. This Euro USD chart. So let me just use this particular example. Okay, let me check another chart. Let's go for GBP USD. That's Great Britain pounds against the what? US dollar. Great Britain pounds
Right.
against the US dollar. So let's look for an uptrend. Let's look for an uptrend. Okay, let's use this example. This one. Let's check out. This is an example of what? An uptrend. Do you get that? This is an example of what? An uptrend. So the market is what? Trending higher. It's me. The market is what? Trending what? Higher. Or better still, the market is moving what? Is moving higher. This is an example of what? An uptrend. Are you following? Now let's check the property of an uptrend. In an uptrend, we see that we form series of what? Higher highs and what? Higher low. In an uptrend, we form series of what? Higher highs and what? Higher what? Higher lows. So now let's check it out. Let's check it out. Let's check it out. Good. So now, firstly, the market started out from this low. Are you with me? Then it went up to form what? A high. Then on coming down, it formed what? A higher low. Are you following? It formed what? A higher what? Low. It didn't form a lower low. Instead, it formed what? A higher what? A higher low. Then it went back up to this point. Let's take over the middle detail. It went back up to this point, forming what? A higher what? A higher high. Because this new high is higher than the what? Previous high. Do you get that? That's why it is called what? A higher what?
Yeah.
A higher high.
Yeah. Aye.
Are you following me? Now we come down.
Yeah.
On coming down, we come down to this point. We formed a new what? A new higher low, because the low is not as low as the previous low. Instead, it is higher than the previous low. So we call it what? A higher what? A higher low. Are you following?
Yeah.
Good. Then we went up again, come down, form a higher low, then went up. This point we formed what? More or less like an equal high. But let's just stop there. So I just showed you what? A typical example of what? Of an uptrending market and what? A downtrending market. Do you get that?
Yeah.
So I just showed you a typical example of what? An uptrending market and what? A downtrending market. Take note of that. Good. We have an uptrending market and what? A downtrending market under the example of a trending market. So if you have a trending market, we either have what? An uptrending market, or we have what? A downtrending market. Do you get that?
Market.
Do you get it?
Yes.
Good. So now,
Yes,
let me
yes.
label it. Let me label it for sake of understanding. For sake of understanding, let me label it. So in this case, we have what? Uptrending
Uptrending market.
Uptrending market. Are you following me?
Yeah.
We have uptrending market. You get that? So in this case, we have what?
Yeah.
We have an uptrending what? Market. In this case, we have what? An uptrending what? Market. While in the previous case, which is this, we had what? A downtrending what? Market. In this case, we have what? A downtrending market. In this case, we have a downtrending market. We had a downtrending market. A downtrending market. You get that? So that's what we had in this what? In this case, we had what? A downtrending market in this case. Do you understand it now?
Yeah.
Good. So I've showed you the two types of trending market that we have. Now we are moving to the next one, which is what? The non-trending market. The what? Non-trending market. Under the non-trending market, we have what is called the ranging market. You get it? We have what is called what? The ranging market. Under the non-trending market, we have the what? The ranging market. So now let's quickly look for an example or a scenario of a ranging market. Let me just check UJ, USD, JPY. Let me check UJ. Yeah, okay. Okay, so let's check a ranging market. A ranging market is one that is neither trending upward nor trending what? Downwards. Are you with me? It's neither going up, neither is it what? Coming what? Down. So it's only bounded between some points. It's bounded within some points. So let's check this out. Let's check this out. Let's check this out. Let's check this out. Let me check. Okay. Or let me just make it as simple as this one. Let's take it as simple as this. Do you get that? As simple as what? As simple as this, as simple as this. So let's just use this little scenario here to check an example of what? A ranging market. This scenario right here, just right here. An example of what? A ranging what? Market. A market that is stuck. A market that's stuck within a boundary. Are you with me? It is bounded by an upper point and by what? A lower point. You get that? It's bounded by what? A upper point and what? A lower point. Are you with me? What is it?
Yeah. No, I'm talking to someone, not you.
Okay, now it's bounded by what? A upper point and what? A lower what? A lower point. So now let's check it out. Let's check it out. Let's check it out. So now, when I say bounded by upper and a lower point, I'm going to show you the characteristics starting from this point. So let's take this point. 1, 2, 3. Let's take this point also. 1, 2, 3. Right with me? So now this is an example of what a ranging market. Right with me? It's bounded. It's bounded. It's bounded at its base and it's bounded at its what? At its top. Right with me? So the market finds it difficult to break this low. Right with me? It cannot break this low. So when it got to this low, it went higher and was what? Returned, or better say, it was stopped by this high. Right with me? It was stopped by this high. So it came downwards, then went up again, stopped by this high, stopped by this low, and stopped by this what? High. So this is an example of what? A ranging market. So a market that is bound or bounded within what? Bounded within what? Within 2 points, or bounded by 2 points. That's what a ranging market. So this is an example of what? Of a ranging market. This is a typical example of what? Of a ranging market. Do you get that?
Yes.
All right, very good. So now.
Yes, I get it.
Very good, very good. So now let's move forward. Let's move forward. You know what? Unmute your mic. Like, I want you to respond. Do you hear me?
Yeah.
I want you to respond right now. So I'm going to go back to our first illustration. Euro USD. Or better still. Okay, one thing I didn't mention right now. Are you with me? Since I've already discussed it in our previous class, I already tell you, okay, this is my point. I already mentioned the meaning of resistance and support in the previous class. So I did not actually illustrate it. Are you with me? I didn't illustrate it. So I'm going to do that right now. I'm going to illustrate it right now. So I'm going to illustrate what it means by support and what? And resistance. Do you get that? What it means by what? Support and what? And what? Resistance. So let me take off this one first. Support and resistance. Let me spell it out. Support and resistance. Are you with me? So what it means by what? Support and what? Resistance. Do you get that? So now, good. So I said something. When the price of a currency pair is dropping, are you with me? When the price is dropping, the point or the price zone where it's unable to break below is called the support. It's called the what? Support. So this is literally called the what? Support. So the market was coming down. Are you with me? It was coming what? It was coming down. Then it was unable to break below this point. It couldn't come down below this point. So it found support here. Do you get me? It found what? It found support. It found support what? It found support here. Then it went back up. Are you following? It went what? Back up. Let me pause there for a bit. So now, on going back up, let me remove this. On going back up, why the market price is moving upwards? The price or the price zone where it finds difficult to break above is called the what? Resistance. It's called the what? Resistance. Are you with me? This is called the what? Resistance. So let me adjust this. So this is called support, and this is called what? Resistance. So let's label them one after the other. Let's label them one after the other. This is called support. Okay. And this is called the resistance. This is called support, and this is called what? Resistance. So let me reduce the text. Let me reduce the text. Good. So this is the resistance or the resistance zone. Yeah, better still. Resistance zone. And this is the what? Support zone. Are you following me? This is the resistance zone. This point is the resistance zone, and this is the what? Support what? Zone. Do you get that? Now let's continue.
Yeah.
So by yourself now, I want you to tell me something. The market now breaks below, coming downwards. Are you following me? Coming downwards.
Yes.
Then it stopped here. It was unable to break above here. Then it went upward. Are you following? It went upward, stopped here, then come downward to this point. Are you following me? Went upward again, went upward again, and come downward to this point. Are you following me? So now listen and listen very good. I'm going to remove this now. I'm going to remove this, and I'm going to label this point. So I want you to tell me what they are. So you are going to tell me this. So while the market was dropping, the point it finds difficult to break below, and while it was coming up, the point it finds difficult to break above. So I want you to tell me something. This point where I'm hovering upon or hovering over is called what? This point.
Support point.
God bless you. It's called the what? Support. This is called the what? Support zone. Right, man? This is called the what? Support. Right, man? This is called the what? Support. God bless you. That's very good. That's very good. That's very good. So I'm going to mark it out now. So we have the what? We have the support here. Are you following me? We have the support. Now, we've labeled the support correctly. Let's take it out. So now the next thing, the market does what? It went up, right? So on going higher, on moving upwards, are you following me? It was unable to what? Break above this point. Are you following? So this point that it was unable to break above, this point is called what? Resistance what? Zone.
Resistance.
So this, God bless you. So this is called the what? Resistance zone. Are you following me? This is called the what? Resistance what? Zone. So let's label it one after the other. So Control C, Control V. So this is the what? Resistance. You get that? This is the what? This is support. You get that?
Support.
This is the support. This is the what? Resistance. Are you following me?
Resistance. Yeah.
Good. So now the market comes downward again. It comes downward to this point. One more illustration, then I move to the next thing. It comes downward to this point. It found it difficult to break below. Then it went back up a bit. Are you following me?
What do you say?
The market came downwards. Do you hear that? After touching this point, let me illustrate it. After touching this point, the market came down. Are you following me? It came down and stopped here. Then it went back up right here before dropping again. So you are going to label these 3 points for me. I'm going to like circle them out. You are going to label it for me. So this point is called what? This point is called what? And this point is called what? So let me take it out. Let me label this correctly. Let me label it correctly. So I've taken out this. So this is the first one. This is the first one. This is 1. This is 2. And this is 3. Are you with me? So now I'm going to ask you the first one. The zone or the point labeled 1 is called what?
Support.
God bless you. This is called what? Support. You get that?
Support.
This called what? This called what? Support. The one labeled 2 is called what? This one labeled 2 is called what?
Resistance.
Resistance. That's good.
Resistance.
Resistance. This one labeled 3 is called what? This one labeled 2 is called what?
Support also.
Support also. Very good.
Support
what? Also. Very good. So let me take out this and mark it out. So now, another question. I want you to follow me. Another question. So the new question now is, what market trend is this? This one we are looking at is what market trend? This called what? This trend is called what? Look at the arrowhead.
Downtrending.
Downtrending market. Are you with me? Downtrending what? Downtrending
Market.
what? Market. God bless you. So now, in a downtrending market, we break what? Let me see. I want you to answer this question. So we formed support, then we break it. Are you with me? We do what? We break it. Do you get that? In a downtrending market, we break what? We break support.
What?
We break what?
Support.
Support. We break support and we find resistance. Are you following me?
Resistance.
We break support
Yeah.
and we find what?
Resistance.
Resistance. Now let me illustrate that. Let me illustrate that. Let me illustrate that. Let me illustrate that. Let me illustrate it. Let me illustrate it. Let me illustrate it. So now, let me zoom in. Let me zoom in so I can get what I'm trying. Hey, sorry. So I can get what I'm trying to say. Let me zoom in. Let me zoom in. Let me try and zoom in so I can get what I'm trying to say. Let me zoom in. We are still on the same chart, though. Are you with me? We are still on the same chart. So now let's check it out like this. Let's check it. Can you see it very well?
Yes.
Very good. Now, this is the what? Support, right? This is the support. This is support, right? This is support.
Yes.
So now we are moving
Yes.
downward. We are moving downward. This is a low. Are you with me? This is a low, right? This is what? A low. This is a low, right? So this low is the same thing as the what?
Yes.
It's the same thing as what? Support. Do you get that? This low is the same thing as what?
Support. Yeah.
Support in this case. So now, for us to be in a downtrending market, we said that what? We must form what? A lower low. We must form what? We must form what? For us to be in a downtrending market, we must form what? A lower what? Low. So this is
a lower low.
God bless you. So let me label the lower low. So let's say these are our lower low. Lower what? Low. Are you with me? Can you see that? These are what? Lower low. You get that? These are what? Lower low. Now notice something. Notice something. The first support, what do we do in a downtrending market? We what? We broke it. You get that?
Resistance.
No. Listen, I said the first support. These are our first support, right? This one is our first support, right? What do we do? We broke it. We what? We broke it, or better say, we break it. Right? We break what? We break support. We what? We broke the first support. Are you following me? The second one, which is the what? Support equivalent to the what? Lower low. This support, this one again. What do we do again? We what? We broke it. Are you following me?
We broke it.
You get that?
Broke it.
God bless you. This is another support. This is another support, right?
Yes.
This one here is another support. What do we do again? We broke it again. You get that? We come back to another support again.
We broke it.
And what? We broke it again. Very good. So we are what? In a downtrending market, we are simply what? Breaking support. We are simply breaking support in a what? In a downtrending what? Market. We are simply what? Breaking support in a downtrending what? Downtrending market. We are simply what? Breaking support. Are you following me? We are simply what? Breaking support in a downtrending what? In a downtrending market. You get that?
Okay.
Now, I've already shown you, I've shown you what? An illustration of what? A downtrending market using support. In a down, I've shown you a downtrending market using support and what? Resistance. Are you with me? Using support and resistance. Using support and resistance. One. I've shown you a downtrending market using what? Support and what? And resistance. Now, so the next thing I want to show you now, I want to show you is what? Using what? A trend line. Using what? Using what? A downward.
Trend line. Do a trend line.
God bless you. So I want to use a trend line to show what? To show that we are moving what? Downwards. Do you get that? To show that we are moving what? Downwards. Now, if you pass through our previous, the previous lesson that was taught, so we said that what? A trend line is just like a slopey support line or a resistance line. Are you with me? It's just like a slopey support line or what? A resistance what? Line. It's just like a slopey, like there is not a straight one. Are you with me? Just like a slopey support line or a what? Or a resistance what? Line. So now, in a downtrending market, we have a trend line as drawn like this. Right? So this is an example of a trend line.
Yeah.
This is an example of a trend line. This is an example of a trend line. What do? We connected two what? Two resistance together. We connected what? Two resistance what? Together.
Two resistance together.
Are you following me? So we connected what? Two resistance together to form what? To form our what? Downtrend trend line. To form our downtrend trend line, we connected what? Two resistance together. Are you with me?
Together.
We connected two resistance together. Or better still, we can either say we connect a lower high to another what? Lower what? High. We connected a lower high to another what? Lower what? High. Are you with me? So this is a high. I didn't actually catch this one. So this is a high, right? This is a high. This is the first high. We connected is in two ways. So your major keys, just try and find two resistance that you can connect together. That's how you draw a trend line. A downtrend trend line. Are you with me?
How do you find the resistance?
It's simple now. The same way. You just look at the market. Look at the market structure, just like we just did now. How do we find the resistance? We looked at the market. We saw that the market is moving what? Downward, right? Then we look for characteristics of a what? Of a downtrending market. What's the characteristics of a downtrending market? Formation of what? Formation of lower lows and what? Lower high. Are you with me? Formation of what? Lower low and what? Lower high. Are you with me? So we had our first high here. We had our first high, right? We had our first high right here, right? Then we came down, we formed what? A low. Are you following me? Then we went up, right? Now coming up, we formed what? We formed a new high. But this new high was lower than the what? Previous high. So we called it what? A lower what? A lower high. Do you get that? Then we come downwards again and formed what? A new what? Low. This new low is lower than the previous low. So we called it what? A lower what? A lower low. Then we went back up. We formed what? A new what? A new high. But this new high is what? This new high is actually what? Lower than the what? Previous high. So we call it what? A lower what? A lower high. So the same thing goes on and on and on, right? Are you with me? So now we see we're able to find resistance like this. These are our first resistance, one, and these are second what? Second resistance. You get that? This resistance one and this what? Resistance what? Two. Or better still, this lower high one and this lower high what? Two. You get me? So we just take our trend line. We take our trend line and we connect what? The lower highs together. You get that? We connect what together? The lower what?
Lower high.
Good. Joe, please take note. This is just a quick illustration. We are going to carefully look at everything one after the other. Trend line, we are going to look at it carefully. We are going to look at it carefully in our next session. This present session is going to be ending in the next 5 minutes. This one we're having right now is going to be ending in the next 5 minutes. It's going to be ending in the next 5 minutes. And I'm going to be dropping another link for the next session in the next 9 minutes after this one has ended. Are you with me? Are you with me? Good. So now,
I'm with you.
Before we proceed, so I want to ask you, do you have any question?
No, I already asked how you find the resistance and the downtrend and the charts.
How do we find the what?
You already asked it already.
Have I answered your question enough, or I should be more illustrative?
Yeah.
I've answered it
maybe
enough.
a little bit more.
Okay, a little bit more. Let me clear the chart. Let me clear the chart. Let me clear the chart. So the question is, how do we identify a trend? Are you with me? Right? So I think this was the first thing I answered from the beginning. Firstly, I said that we look at this market and we see it's moving what? Downward, right? This one is very easy to see. We see it's moving what? Downward. Now, look at this. Listen. This is a market that has played out already. It has what? It has played out already. So this is easy to say. Are you with me? It's easy to what?
Yes.
Easy to what? Say. God bless you. Now let me show you something. Let me show you what? Something. So now let's start like this. Let's say we didn't know the trend of the market. Let's hope we'll be able to illustrate this. Let's say we didn't know the trend of the market. Are you with me? Then the market now started out. When we came to the market, we could only see this part of the market, this part. We could only see up to this part of the market. Are you with me? Up to this part. Are you with me?
Yes.
We could only see up to this part of the market.
Yes.
Where this arrow ends, we could only see up to this part of the market. So how do we say we are in one particular trend or the other? That's the question you just asked, right? Very good. So now we look at the property of the chart right now, the structure we are looking at. Let's look at this detail. Because we already know what's played out, but let's look at this detail. So from here, we had the eye, right? Are you following me? We had what? A eye, right? Now, this eye that we had here, from what we could see, this eye, we had what? We also had what? Let me mark it this way. We had what? We had a low here also. Are you following me? Are you following me?
Yeah.
So from here, we cannot say we are in a uptrend or a downtrend. Then the market moves on. Now, this is what? Support. This is support, one. So now the market went back up. The market did what? From this point, the market went up, right? But did it come up to this point?
Yeah.
Did it come up to this point?
No.
God bless you. It stopped where?
No.
It stopped here, right?
Yeah.
It stopped here, right? Good. Now, since it stopped here, it formed what? It formed another what? Another eye, right?
Downtrend.
It formed another eye, right? Now, this eye that it just formed here, this eye that it just formed here, is it higher than the previous one?
No.
Good. Now, what now happened next?
No.
It broke what? It broke what? What is this? It broke what? No, it broke what?
Resistance.
No, it broke support. This is support, right?
Oh,
this is support. It broke what? Support. Are you following me? Are you following me?
Yeah.
It broke support and found the what? A new low at this point. Actually, it found a new low at what? At this point. Do you get that? Are you following me? So now what do you notice? The market just formed what? The market just formed a new what? A new low, right? Which is lower than the what? Previous what? Previous low. Are you with me? Are you with me?
Yes.
The market just formed a new low, which is lower than the what? Than the previous what? Low. So this is the property of a what? Property of a what? Of a downtrending what?
Downtrending market.
Downtrending what?
Downtrending market.
God bless you. Property of what? A downtrending what? Market. Do you understand it now?
Okay. Yes.
Good. So I'll be stopping this Zoom meeting right now, and I'll be posting another link in the next 9 minutes. Do you get me?
Yes.
Okay, I hope you join. All right.
When is the meeting?
What are you saying?
The next meeting, when will it be?
Like by 7, no, in the next 9 minutes. Yes, or by 6:55. 6:55. You get that? Yes, by 6:55. Okay, now. Thank you very much for your participation.